Hey everyone, welcome. I am so thrilled to have you here for this explainer. Today, we're diving into a tool that is, quite honestly, absolutely essential if you're navigating the financial realities of buying a home in the Hoosier State. We're talking about the Indiana Mortgage Calculator. Now, if the sheer amount of numbers usually overwhelms you, trust me, you are not alone. Let's uncover exactly how this tool makes all that complicated math just click.
It's a question that keeps so many of us up at night, right? Ever thought if your dream home is actually in your budget? Buying a home is a massive deal. It's an incredibly exciting milestone. But let's be real for a second. Many buyers feel completely lost when they start to realize that the beautiful sticker price on a real estate listing is literally just the tip of the iceberg. There's this whole world of hidden housing costs lying just beneath the surface, and that illusion of affordability can quickly turn into straight-up anxiety if you aren't prepared.
And really, that brings us to the core mission of this explainer. It's perfectly captured by this quote from a mortgage industry expert. Financial literacy is the most important tool a homeowner can possess. When you understand how your loan is structured, you gain control over your long-term financial health. That is exactly our mission today, you guys. We're going to find you total financial clarity before you even open a real estate app, ultimately putting you firmly in the driver's seat of your financial future. So let's jump right into section 1, the problem. Hidden housing costs. Okay, if you're feeling stressed about all these confusing expenses that make home buying feel so overwhelming, your feelings are completely valid. It is incredibly common. To truly understand your budget, you really have to look at what's actually inside your monthly payment, because it's not just paying back the house price. It's the PITI pie: principal, interest, taxes, and insurance. I want you to think of PITI as the absolute DNA of your monthly payment. The principal, the actual money you borrow to buy the home, that's just one single slice. You also have the cost of borrowing that money, which is the interest, plus taxes and insurance, which are entirely non-negotiable. If you don't account for the whole pie, well, your budget is going to be wildly off. Let's look at taxes specifically for a second, because local factors can really sneak up on you. For instance, property taxes vary a ton by county in Indiana. In Hamilton County, the property tax rate averages about 0.9%, while just a bit away in Lake County, it's around 1.0%. Now, that tiny fraction of a percent might sound like nothing, but when applied to a home's total value, it can significantly alter your expected monthly housing budget. It's these exact local variations that make using a specialized calculator so incredibly vital.
Moving on to Section 2, the breakdown, decoding mortgage jargon.
If hidden costs are the problem, the complex, frankly, ridiculous jargon used by lenders honestly just makes it worse. So let's tackle it together. First up, amortization. It sounds super intimidating, but as a quick refresher, it's really just the math of spreading your loan into equal payments over time. In the early years, you're mostly just paying off interest, but gradually, that shifts to paying down the principal. It's literally the exact mechanism of how you build equity in your home faster as the years go on. Understanding this curve is an absolute game changer for long-term planning. Next up is escrow. Think of an escrow account as your own special financial safety net. Instead of getting hit with a massive surprise bill for your property taxes and home insurance once a year, an escrow account takes those big annual costs, divides them by 12, and rolls them right into your standard monthly mortgage payment. It protects you by turning giant, scary annual bills into predictable, manageable monthly chunks. And then there is PMI, or private mortgage insurance. So here's the crucial thing you need to know about PMI. It's an added, hidden cost designed strictly to protect the lender, not you. If your down payment is less than 20% of the home's purchase price, you're likely going to be required to pay PMI. This can cost anywhere from 0.46% to 1.50% of your total loan amount every single year. But remember, a larger down payment acts as a shield against market changes and can actually help you avoid this extra cost entirely. All right, Section 3, the solution. Your digital financial mentor. The good news, you don't have to calculate those escrow divisions or amortization schedules by hand. The Indiana Mortgage Calculator steps in as your digital mentor, automatically processing all this confusing data to give you instant, real-time payment estimates. It helps you easily apply the golden rules of home affordability, starting right here with the 28% rule. Your total monthly housing costs, that entire PIT pie we talked about earlier, should not exceed 28% of your gross monthly income. This just ensures you aren't spending so much on your house that you can't afford groceries. Or, putting money into savings. And the second half of that rule is 36%. This means your total debt payments, so this includes your new mortgage, plus any student loans, car payments, and credit cards, should not surpass 36% of your total income. Using the calculator helps you instantly see if a potential dream home keeps you safely within these healthy financial boundaries. Which brings us to Section 4, the strategy, comparing your loan options.
Now, this is where your digital mentor really shines for long-term cost analysis. We're essentially looking at the ultimate battle of time versus money. Check out the comparison here between a 15-year and a 30-year term at the exact same 6.5% interest rate. Yes, absolutely, the 15-year term has a higher monthly payment, $1,742 compared to $1,264, but look at the total interest paid column. By paying just a bit more each month, the 15-year loan costs you $113,560 in interest over its life, while the 30-year loan costs a staggering $255,040. That is over $140,000 in massive long-term savings just by changing one little drop-down in your calculator. Mind-blowing, right?
The calculator also helps you weigh different mortgage structures, like a fixed-rate mortgage versus an adjustable-rate mortgage, commonly called an ARM. A fixed rate is absolutely perfect for long-term buyers who want total stability because your rate literally never changes for the life of the loan. An ARM, however, usually starts with a lower initial rate, which can be great if you plan to move or refinance pretty soon. Your calculator lets you model both of these scenarios so you can easily weigh the immediate savings of an ARM against future market risks.
And finally, Section 5, the action plan, next steps to homeownership.
Okay, so we've covered the hidden costs, we decoded the jargon, and we talked strategy. How do we actually translate all this new clarity into action? Well, it starts by putting that digital mentor to work. Here are the exact steps to effectively use the calculator and generate a personalized financial roadmap. Step 1. Input the home price and your planned down payment to establish your true principal balance. Step 2. Add the current market interest rate. And remember, always check the latest averages to keep it accurate. And Step 3. Choose your loan term. And definitely don't forget to manually factor in local property taxes and insurance to get that complete PITI picture. Once the calculator gives you a budget you are truly confident in, these are your concrete next steps. First, get a pre-approval letter. This involves a lender formally verifying your financial data. It is absolutely crucial because it proves to sellers that you're financially ready and a serious buyer. No messing around. Next, connect with trusted local lenders, places like Chase, Fifth Third Bank, or local Indiana credit unions, because they can offer customized advice tailored to our specific local market. Finally, compare their offers against your own digital estimates to finalize the perfect mortgage choice for your lifestyle.
Before we wrap up, I want to leave you with this final thought. Are you ready to take control of your financial future before you even look at a real estate listing? The smartest homebuyers out there aren't the ones who just fall in love with a house. They're the ones who do the math first. So I challenge you, use the Indiana Mortgage Calculator today. Build a budget that acts as a rock-solid foundation so you can confidently search for a home that supports, rather than hinders, your incredible financial health. Thank you so much for joining me on this explainer, and hey, happy house hunting!